As an investor, what I want to do is create an algorithm, create a method, a process by which I can determine what the price of the stock is going to be in the future. And what I've chose to focus on is the price of stocks that I want to follow that are in the semiconductor and the big data AI system, and try to determine what the price will be on January the 1st or 2nd of 2027. And in order to do that, the price of a stock is made up of two elements, and that is its PE ratio and its earnings per share. Now, what you're doing, your PE ratio basically represents how many years of future earnings are you going to pay for that stock to take ownership of it, or partial ownership of it. And so I want to focus on three stocks that I think are important in this quest that I'm on to make more money. And that is, I want to look at Micron Technology, Nvidia, and Amazon. Now, I actually track 42 stocks, and they're on my cheat sheet, and that's what you see right here. But let's skip down here to Micron Technology, MU. Current price of 101.96. Now, this is a live sheet, so you may see some of these numbers change because the market is open right now for about another 30 minutes. And so we'll get price changes. This is their market cap. The first thing I want to point out is their PEG ratio. All of these numbers are the metrics that tell you how efficient a company is in taking your dollar and turning it into profits. And we get into that if you're a part of our tribe, that you have daily access to this spreadsheet. The number I want to look at is this. This is its PEG ratio. This is a measure of how the stock is priced relative to its earnings, relative to all the other stocks in the stock market. If it's under 1, it is it's underpriced. So you see that Micron has a 0.22, very underpriced. Amazon has a 0.29, very underpriced. We're going to look at Nvidia. It has a PEG ratio of 1.34. So it is not the bargain that the other two are, but it's still going to give us some good return. So what I then do is say, okay, if I know what its historical PE ratio is, and as I said, let's look at Nvidia, its PE ratio is 64, Amazon's is 35.42. If we know that, and we believe that's fair, and then we can research and we can determine what the earnings per share are going to be on January the 1st of 2027. We can multiply that earnings per share times their PE ratio, and we can project the price. It's really that simple, okay? So what I'm going to show you here then is, as we move across, so Wall Street says the fair price of the stock over the next 18 months is $146.22. What I do is look at what are the earnings in 2024 and in 2025, divide that by 2, and then multiply that times the PE ratio, and I come up with a price of $239.03. I'm really not really interested in that price. The price I'm really interested in is this one, January the 1st, 2027. So again, I take their earnings, which I am able to gather from the sources that I have, the websites that I subscribe to that give me the projected earnings on Micron, and I come up with that I'm expecting the price on January the 1st to be $262.02. That will give me a total rate of return from the 102 that it is right now of 156.45%, or an average 2-year gain on the price that it is today of $78.23. So that's how it works. And that's what I do. I've created the algorithm. I've created the sheets to scrub the data, change these numbers when the projections change as a result of their earnings calls, to give me a projection on 42 stocks, and then I determine from that which ones I want to own. So to make that a little more clear, let's look at Amazon. Current price of $195.56. Its current PE ratio is 41.96. I believe that's a little high. So in my calculations, I will pull it down to what I believe it to be based on its 5-year history and its like PE ratios from other companies in their industry. So then we come across, and as I say, it has a PEG ratio of 0.29, so its current price is underpriced relative to the PEG ratios of other companies in the stock market. Then I come across, and Wall Street says it's going to sometime in the next 12 to 18 months get up to $226. I believe its fair price today is $243.96, and obviously the PEG ratio agrees with me. I believe that at the end of 2025 it will be $316 and then $412 at the end of 2026 or start of 2027. That will give me a total return over the next 2 years of 110%, or an average rate of return of 55.42. You just saw the numbers change because the stock price changed, because this is a live sheet. Then let's go to Nvidia. Nvidia is down here underneath micro. As I said, 137.63. A pretty high PE ratio of 64. That means you're paying for the next 64 4 years of earnings on Nvidia. I think that's a bit of a stretch, but that's my opinion. I factor it into my price. PEG ratio, as we said, of 1.34. Wall Street believes in the next 12 to 18 months it'll get from 137 to 151. I kind of concur with them about 155, 196, and I believe it's going to end 2026 at 211, which will give me a 53% return and a 2-year average of 26.81. Not near that of Micron or Amazon, but at the same time, a good, healthy return, and a stock that I really want in my portfolio, because I believe some of these numbers may be blown out as whatever changes or evolves in the GPU industry. Now, I want to show you some that I think are some eye-opening. Here is a stock, Snowflake. A software company, went through some major changes in CEOs, but a lot of people feel it really has a future. Snowflake is selling for $114.39. Its PE ratio is 192. So in other words, I am paying for 192 years of its current earnings. It better have some phenomenal earnings in the future to justify that. Its PEG ratio is 8.6. So relatively speaking to the rest of the industry, it's way out of line. So I then go and I look at what Wall Street tells me it's going to be worth. And it's, as I say, it's currently 114. Wall Street tells me it's going to be worth 170. Okay, in the next 18 months from 114. If I put my calculations to it, a realistic PE ratio, and its current earnings and its next year earnings, I believe it's worth $23.70. If I go out to 2027, I believe it's worth $35.40. So I have a loss of 70%. And an average loss of 34%. So this is how I analyze stocks. I don't know if it's right for you or if it's wrong for you. But what I want to do is, number one, educate you so that you can have some reference as to what is a stock price worth. What's it made up? It's made up of its PE ratio and its earnings. And if you can determine the earnings in the future and put a realistic PE ratio on it, you can know. Now, again, 192 PE ratio. There are others that are kind of high. Here's ARM, 103, a PEG ratio of 2.94. It's probably not something I want to own because there's too much risk. There's too much risk to say somebody believes that they know something that nobody else knows. Well, if I can buy Amazon and get a 55% average return over the next 2 years, why would I do that? Why wouldn't I do that? I know the company. I know its history. I know what it's going to do. So this is what I share with my tribe members. If you want to be a part of this, you come and you join our gold level. It's $19.99 a month, and you use it. See if it works. If it doesn't work for you, you bought what, two cups of coffee at Starbucks for the month. And if you say, this doesn't make sense to me, I can't use it to my benefit, then cancel it. But put the numbers to your advantage. This is all financial analysis. I'll share with you and explain to you all the rest of it. I want to point something else out that is interesting. Dell. We all know what's happening to Supermicro Computer. I hope you do. If you go on its current price at $25.97 and it squares itself away, you're going to have a real winner. On the other hand, you might have a real loser if the courts or whatever happens to it. But look at Dell. Look what's happening to Dell. Who's going to get Supermicro's business? It's either going to be Dell or Hewlett Packard. So I want to track Dell. Right now it says it's a little overpriced, but look what its potential is. If I come across here, right now it looks like if you buy it at today's price, you're going to, over the next 2 years, you're going to get an average rate of return of 38.5%. You put all this together,